hear me? Is it working? Perfect. Oh. How about now? Perfect. All right. Hi, everyone. So my name is Tarek. I'm a sales director at Zero Hash. I mostly lead both the iGaming and prediction market verticals in the business. And purpose for today's discussion is to kind of go through 2 points that I think will be pretty beneficial for the industry's years. So kind of to put the agenda, although yes, there are 6 items, it's mostly going to be 2 topics. So the first topic is kind of why crypto, and more specifically stablecoin, is really going to become such an important and frankly, I think also pretty much underutilized tool in the prediction market vertical. And the second point is going through a couple of real-life case studies that we've seen since going live with Kashi in the 2024 presidential elections, or at least in the run-up. And where we are 2 years down the line. Are we still seeing the same numbers, the work that's being done behind the scenes? I'll try to keep this practical, no buzzwords, no fluff, just straight to the point how this looks like in real-world scenarios. So let's start with the core problem. I think we can all agree that prediction markets live and die by speed, access, and trust. What I mean by that is if a user wants to take a position on an event, whether that's inflation data, Super Bowl, or even the presidential election, they need to trust that their funds are safe, they're able to fund their accounts instantly, and they can move in and out without friction. Now, traditionally, the mechanisms, and I'm probably going to echo some of the things that was said earlier by the Edge Market team, but the funding mechanism that we've been seeing are ACH, wire transfers, and cards. And those absolutely do work, no hate on them. But I think we also have to admit that they do come with some trade-offs that kind of mess up the core principles of a prediction market's intended user experience. So to start off, ACH is pretty slow. It can take up to several days, especially when you consider funding an account on a Friday night. You're probably not going to see your funds in your wallet before Tuesday. Wire transfers can be expensive, to $20 to $50 a pop, depending on how much you're putting in. And cards have high fees. And also from a platform's perspective, there's also the risk of chargebacks, which we also have to consider. And in pretty much most of these rails, you have deposit limits in some cases. So the experience from a user's perspective, from a trader's perspective, is that I'm ready to trade, but I can't. And that's really a huge problem when we think about working in a vertical where timing absolutely is everything. I need to move as fast as the information comes to me. So that said, let's take a step back and kind of go over what Zero Hash is. So at a high level, the business has evolved quite a bit over the years. So we started off and still are a pretty well-established vendor for financial institutions, brokerage firms, and we work with the likes of Morgan Stanley E-Trade, we work with Gusto, WorldPay, Franklin Templeton. We offer everything from tokenizations to on and off ramp, stablecoin rails. But what we really are is we basically provide the infrastructure layer to allow platforms to embed a crypto ecosystem without necessarily becoming a crypto native business. So for a platform like Kashi, who's a customer of ours, we're not really replacing any of the existing rails that they have. We're just giving them that infrastructure layer to complement the payment methods that they already have, to basically allow them to start accepting crypto as a method for account funding and converting those funds into USD. So from Kashi's perspective, they're not exactly a crypto native business because we're converting them for them. And to go even a little more detailed, instead of Kashi having to build crypto wallets, manage private keys, handle blockchain integrations, doing transaction monitoring, or even worse, dealing with regulatory complexities, you have to think that if you're launching a stablecoin funding mechanism across 50 states, that takes years. 49 MTLs, the New York BIT license, it's a little tough. And we also manage liquidity. So think of us as we do all of the plumbing. We're basically the engine that's under the hood that basically makes it into a seamless experience from the user's perspective and also the platform. And just to kind of show you exactly what it looks like, I promise no buzzwords, but I'm just going to have to show you how the flow looks like. When the user gets to the cashier stage, picks that they want to pay with crypto, they then move on to the next stage where they basically have to select the source, which of the exchanges they want to use. And you'll notice that it's kind of different to what we traditionally see whenever we're funding with crypto, where you have the QR code method or you copy and paste the wallet. With our flow, it's basically going through choosing which of the exchanges you have. So let's say I have a Coinbase account, I put in my password and in my email, I then decide how much I want to deposit, and then it gets credited on the platform side. So we just send it via webhook. And this is something that we're actually pretty proud of and rolling out now as we speak. And we also do the QR code method. But the main reason why we think this is kind of a much better approach, which I'm sure a lot of you would agree with, is one, from a user experience perspective, it's much better. There's a lower risk of your user mistyping their wallet address, and also from a regulatory perspective, it also gives you an advantage because we run KYC to account name matching. So again, it's kind of two birds, one stone, where we do all of that for you. So that being said, let's go back to the original point that I brought up, which is why crypto, and more specifically, stablecoin is becoming such a strong fit for the prediction markets. So to start off, crypto is fast. Not faster than ACH, we're talking much faster than ACH, milliseconds to the days. And that's, in a prediction market, the difference between entering a position early or missing it entirely. We were just hearing it from the earlier panels, which talking about how timing really is everything in the prediction market vertical. Aside from that, crypto also doesn't require deposits. So you have the ability to choose what limit you want to put in on your deposit. So we have some customers, having deposit limits of up to $500,000. Another point also is that crypto is borderless. So even as a regulated exchange under CFTC license, your users outside of the US are still supposed to be allowed to deposit or withdraw. And with crypto, you don't necessarily need any local payment rails or traditional financial institution. If you have a wallet, you can withdraw, you can deposit, shouldn't be a problem. And finally, and most important of all, crypto is 24/7, 365. So markets don't sleep, and neither does crypto. So unlike a bank where you can't really deposit on a weekend, you have delays, you have cutoff times, you absolutely do not have these issues with crypto. But that being said, let's kind of put the user's perspective aside and really think about it from a platform's perspective. Why is this beneficial? So to start off, we're completely removing the risk of chargebacks. Think about it, like movements from wallet to wallet is finite. There is no ifs or buts. So the equivalent of mistyping a wallet, even without the auth flow that I showed earlier, even with a QR code wallet, if you mistyped your address, it's the equivalent of losing your physical wallet at a grocery store. It sucks, but it's not the store owner's fault or mistake. They're not liable for it. Also, another point that I always like to mention is that, think about it this way, if you give your users additional methods to deposits, they will ultimately deposit more, which means they will trade for longer. And another point that I wanted to touch on, which I always like talking about, which is that crypto is too volatile, which is absolutely true when we're talking about meme coins or even Bitcoin and Ethereum, but it's such a misconception when it comes to stablecoin. So actually, before I move forward, we've talked about stablecoin a lot, but by show of hands, who knows what a stablecoin is? All right, there are a few hands that are still down, so I'll basically explain it. I'll have this. So a stablecoin is basically a digital asset that's pegged to the US dollar. The big advantage that you get there is that it gives you the stability of the US dollar, but the flexibility of crypto. And that's kind of why it's such a powerful tool right now, because every one of the pros that I talked about earlier, which is movement of money, velocity, you kind of get those advantages minus that volatility that usually comes with traditional crypto. And another point to bring up is that stablecoin is rapidly starting to take over the world. I mean, in just the last 2 years, 750 million people hold on to some sort of stablecoin, with more than $28 trillion in volume just in 2025. And with the Genius Act coming right around the corner, which I think is going to take effect on January 27, we can only expect higher adoption. So what I've been saying to most people in the industry, and not just with prediction markets, even with gaming operators that I've been talking to, is we're kind of at an inflection point right now. It's not really a question of, let me take a step back, let me see someone else do it, and then see how it goes, and then I'll decide to do it. You absolutely want to storm the beach and be on the front lines before the market saturates. We all know that the average trader or even player with gaming operators typically has 2 to 3 applications, so they are probably trading with one of your competitors. And we are always fighting for that tiny edge to kind of set us aside from our competitors. And this is one perfect example of them. If I'm holding onto some sort of stablecoin and your competitor is offering me a method to deposit with stablecoin, then I will ultimately favor them. So the way we always looked at it is kind of give your users as many options as possible so that they can take advantage of it. So that being said, let's go over a case study, Calci. So we went live, like I said earlier, with Calci around 7 days before the election. That's kind of what made it very interesting, was the timing of it. And they use our account funding tool, which is, like I showed you earlier, the conversions from crypto to fiat. And they went live with us about 7 days before the election. So we had a lot of people working on it, and so did they also. But kind of what I think was particularly interesting were the stats behind it. And again, we'll go through some of the stats that you see on the screen. So just the first 7 days of going live with Calci in the run-up to the presidential election, we saw $25 million in USDC deposits for around 17,000 users, which is massive, just 7 days before the elections. Another very important point is that $13 million of those $25 million were only deposited on the last 2 days before the election, so the Friday and Saturday. If we were stuck with ACH, this never would have happened. If we were stuck with cards, it opens you up to a risk of chargebacks. If it was wires, also it was going to take a little longer. So, you know, it just kind of shows how there is demand for this, and there are actual users that do want to have it. And the average account size is around $3,000. So now for all the skeptics out there that, you know, would say that the election was a driving force, and absolutely rightfully so, it was a very big event, and also we can't really take the credit away from Kashi. I'm not saying that if you adopt crypto account funding, therefore you will unlock $25 million in USDC deposits. But the way we kind of looked at it is it kind of facilitates that readiness for successful volumes that could come your way. And yeah, I think what could make sense also is to kind of look at where we are now, almost 2 years down the line. Are we still seeing the same volumes? Are we still seeing the same success? And the short answer is yes. You know, the Super Bowl was kind of a big event for us. It's not just a big event for sportsbooks, it's also a very big event for prediction markets right now, mainly because of the sports wagering contracts due to their efficiency and transparency. But market level data still kind of show sportsbooks as being ahead of the curve. They had the record high year with $1.76 billion in total handle versus prediction markets 700 million. But that's kind of starting to shift. And the reason why I'm saying that is because we have to take into consideration that the fact that prediction markets are still very new. They're available in all states, whereas sportsbooks, you have some limitations there. They're a lot more flexible when allowing users to trade and sell versus sportsbook, it's limited. You place your bet and you're stuck with it until the event's over. And finally, prediction markets weren't allowed to run mainstream ads. Sportsbooks had that. So these volumes were purely achieved on hype. So with that in mind, the way I look at it is these volumes are only expected to grow in the years to come, or at least in the next 3 years. So on Zero Hash's side, over the Super Bowl weekend, we saw some of our highest stablecoin account funding volumes across our entire business with all of our other partners that leverage our tech. And one of our core principles, like you see, is maintaining the velocity of money. We understand how important that is. But I'll let the stats speak for themselves. So 50% of people who use stablecoin account funding were first-time transactors during the Super Bowl. 75% of those transactional volume move via stablecoin. And then finally, the average time for deposit, the stablecoin conversions was 0.1 seconds. So we can already see that this is opening up new user segments. This is definitely something that we need to be on the lookout for. And yeah, so to close things off, I think prediction markets, and a lot of gaming operators are going to hate me for saying this, but they're at the middle ground between a financial institution and an iGaming platform or a gaming operator. And what I mean by that is they require the compliance of a bank, but the user experience of a sportsbook. And that's exactly why crypto really works so well here, because it kind of bridges the gap between the two, where we offer transparency and traceability, which regulators absolutely love, but we also offer the speed and accessibility which users need to be happy with an application. So what we're seeing today isn't just adding a new feature, it's a shift in user behavior and how they interact with financial platforms. And prediction markets are uniquely positioned to handle that, where they combine finance, trading, real-world events, and they require speed, trust, and accessibility. And they also benefit massively from, removing friction. So I think ultimately the platforms that will win in the space are the ones that are going to let their users act on conviction instantly. And increasingly, I think that's what crypto is starting to enable. So yeah, that was it for my time. Thanks so much, everyone. Yeah, and if you have any questions, go ahead.